we nailed it last year. Okay, there was in spring of last year, as you might recall, ancient times, Liberation Day, tariffs, inflation's going to take off. And
Apple's
there's
going out of business.
Apple's going out of business, and there's going to be a recession. I can't believe the statistics, so I brought it for you. Less than 20% of CEOs thought we'd dodge a recession. Look at where we are now. Look at what Lisa was just saying. Okay, we're totally in a different planet.
Major shout out to Claudia Sam as well.
Yeah, so I'm just saying,
well.
you got to get this call right. If you don't get this call right, the rest of it's, as we were saying earlier, noise. So in 2026, looking forward, on my radar, it's all about inflation. What's the inflation cycle going to do? We nailed the down but sticky, and that's staying, that's still there, and it hurts like hell for anyone who eats or drives a car, right? Because energy took off the prices rose 30%, and they've come down, the pace has come down, but the level's still high. So that's why everybody's upset. But all of this stuff is priced off of your rates, and all of your rates are putting in growth and inflation together to get to your rate. And growth, as we've said, is resilient. Jobs are not going to collapse. Inflation's sticky. If it turns up, that's such a game changer. Such a big deal.
In what way? For the Fed? I mean, I know for us as consumers.
Yeah. So the headlines are all, what's happening with the Fed, the politics around it. The really big issue, I think, underneath that is we have a lot of debt. And you have to pay interest on that debt. And if someone who is investing in bonds, who's looking at growth and inflation, demands a higher rate of return because inflation expectations move, that's a big deal. Now, I'm going to make you go way back. Nixon, 1971. He comes out. He does a game changer. All this stuff is happening. Everybody says it's going to be really inflationary. It didn't happen right away. He does this in August 71. You don't get inflation until 73. So everybody who bet on inflation got flat-footed, got hurt. Then they finally gave in, and then inflation turned. So I am just saying that you got to watch the forest for the trees here. As Tom said, I think it's the vector, it's the cycle direction, and I'm watching in 2026 for an inflation cycle turn.
Cautionary tale, for sure.
But so right now we're okay. Right now we're good to go.
But then how do you play that in the market? If we're good to go for now, but you've got a longer horizon, what's an investor to do?
Well, you got to be diversified. You have to look at your cyclical risk portfolio. And now I'm talking the way I talk to my clients, okay? And see where...
That's okay. You can talk to us that way.
I can talk to you that way. So see where the risk is. We've been, I think everybody's been fairly risk on, but you have to protect against this inflation cycle turn. There's a global industrial upturn out there. So regardless of wanting hard assets anyway, because you might want to be diversified, gold, copper, these kind of things, there's actual demand there too. And that demand growth is not going away. So that's a good thing.
Can we do an audible?
Yeah, tell me.
And I'm doing this for Paul Sweeney. Sweeney's down in Aruba. Emails saying, "Good morning, Tom." Should I answer him? I don't think so.
Yes.
Oh, don't ice him out.
Life is tough. Lakshman, you with your philanthropic efforts in New York, you're on all sorts of boards, all sorts of foundations. Lakshman Achuthan, where old money knows, buy liquidity. Be sure you can get out because you may never want to, but liquidity is really important.
Yeah.
Private credit and private equity on this show have gone dark in January. Yeah. There's a silence out there. Discuss what's coming down the pike for well-meaning people who diversified into alternatives.
Well, they're looking at their lockup, right? Because there's all kinds of weird language in your lockup. And even if you're
the only one who knows actually read it, so continue.
So there's weird language in there. So I love liquidity. And rates are going to impact all this credit stuff. And it's like, what's the thing? What's the private investment worth? It's hard to know sometimes. And if rates move, then your asset there is even more questionable what it's worth. And also, when things get volatile, I mean, this is just my philosophy. You want liquidity so that you can make moves. and
or protect yourself
to the downside. Well, you have to be able to move. I don't like lockups too much. If you get my point, if I'm not making it clear, if I'm not making it clear enough, I'm a little, I definitely want some maneuverability, and there are other assets that can give you the returns. Look, it's all risk return, right? Mm-hmm. So there are other assets that can give you returns. I mean, there's stocks and bonds.
Do tell us. Tell us. We want specifics.
Well,
to the extent that you can.
Yeah, commodities and credit. There's all kinds of action going on there. People are venturing abroad because is it the time to be abroad in the U.S.? And I'd be careful there. The U.S. is still pretty darn good. So you have to be able to watch the vector. I'm going to go right back to where Tom started. If there's a cycle turning point, I think that's the watershed event in 2026. If I come on here, I'm going to come on here every month. If I come on here and I start saying there's an inflation cycle upturn, we need to rethink the diversification of your risk.
But we're not there yet.
Not today.